welcome to another 55-minute trip around the world of business. This time it's on Business Incorporated, and here's what we have prepared for you. In Tanzania, the government is raising minimum wage to 500,000 shillings. That's after a 35.1% increase. And Zimbabwe's mining growth is seen to be significant. Senegal is launching a pilot project for interministerial data exchange. You're welcome to the program. I'm Ini John Mekwa. We start from the global space. As usual, oil prices fell on Friday as traders squared positions ahead of an OPEC Plus meeting and amid some skepticism about the potential de-escalation of the trade dispute between China and the United States. Brent crude futures lost 42 cents. That's about 0.7% for this afternoon to $61.71 a barrel. WTI is also down, gone even below the $60 per barrel after a loss of 0.8%, $58.78 for the week. Brent and WTI are on track for a 7% drop. That's the biggest weekly declines in a month. China's Commerce Minister says that Beijing is evaluating a proposal from Washington to hold talks aimed at addressing U.S. President Donald Trump's sweeping tariffs, signaling a possible easing of the trade tensions that have rattled global markets. There is some optimism when it comes to U.S.-China relations, but the signs are only very tentative. It's still very fluid. It's expected that it's just one step at a time. We do not know how or when the major conversations will start. Still in the global space now, but for metals, we see gold prices are poised for their worst weekly performance in more than 2 months on Friday after receding trade tensions tampered safe haven demand, while the market's focus has shifted to the U.S. non-farm payrolls. That's supposed to be out later on today. So we see a 1.46% increase on spot gold, but we see it's lost that 3,500 level that it's that it's hit a new level, a new high record. So $3,269.60, and U.S. gold is also up 0.8%. $3,247.90. Spot silver up 0.5%, $32.57 per ounce. Platinum is on change, and palladium is also up 0.9% to $948.74. The United States has approached China to seek talks over President Donald Trump's 145 tariffs, and Beijing's door, they say, is open for discussion. This signals a potential de-escalation in the trade war. Tariffs are easing. Both the U.S. and China seem to be willing to talk and listen, take a step back. That's weighing on gold prices. So the need for a safe haven, which the metals we're serving, seem to be reducing. Meanwhile, U.S. manufacturing contracted for a second straight month in April as tariffs on imported gold strained supply chains, keeping prices at the factory gate elevated and encouraging some firms to lay off workers. The market now awaits the non-farm payrolls from the United States for more cues on the direction of the Federal Reserve. Chinese markets are closed for today for the labor holiday from May 1st to 5th and will resume on Tuesday next week. So from the global space, we come to Nigeria. The Federal High Court in Abuja has rejected an interim restraining motion filed by eNaira Payment Solutions Limited against the Central Bank of Nigeria's use of the eNaira trademark. Justice James Omotosho delivered the ruling on a motion and notice filed by the firm against the CBN and others. The CEO of eNaira Payment Solutions Limited, Jonathan Kenneth Adoke, approached the court seeking an order directing the CBN to immediately seize any communication or engagement with the United States Patent and Trademark Office or any other foreign authority regarding the eNaira trademark pending the determination of the suit before the Nigerian courts. And Meta says it may be forced to shut down Facebook and Instagram in Nigeria, citing unrealistic demands and nearly $300 million in fine imposed by at least 3 government agencies. The Federal Competition and Consumer Protection Commission has upheld a $220 million fine on Meta, the platforms, and its subsidiary WhatsApp for violating the country's data protection and consumer rights laws. The penalty, which Meta must pay within 60 days counting from last week, was upheld by the Competition and Consumer Protection Tribunal on Friday, April 25, following a comprehensive investigation. The African Development Bank Group has approved a new 5-year country strategy paper for Nigeria, committing about $650 million annually between 2025 and 2030 to drive economic transformation, build resilience, and foster broad-based prosperity. The bank disclosed this in a statement published on its website, saying that $2.95 billion would be provided over the first 4 years of the plan, to be complemented by an estimated $3.21 billion in co-financing from development partners. The new strategy focuses on 2 key priority areas: promoting sustainable, climate-smart infrastructure to enhance competitiveness and industrial development, and advancing gender and youth-inclusive green growth through industrialization. According to the bank, this strategy aims to close Nigeria's infrastructural gap, which is estimated at $2.3 trillion between 2020 and 2043, by investing in climate-friendly roads, electricity expansion, clean water systems, and supporting agribusinesses that create jobs, especially for women and the youth. Investments are expected to support Nigeria's ambition to double the size of its economy to $1 trillion and create about 1.56 million jobs. As inflation continues to tighten household budgets, making consumers become more price sensitive, according to findings on Nigerian consumers by Seed Incorporated. The managing partner, Mr. Olatubosun Akeju, says that most people spend their income on food, making it more imperative for the government to create and implement a more holistic approach to dealing with food insecurity.
It's challenging. I mean, there are parts of Nigeria where people spend more than 100% of their income on food. That means sometimes those people are not eating. So food inflation, there are many things that can contribute, and we don't have to downplay it. I think we just need to work towards solving the problem and harnessing the opportunity. I mean, when you look at it from a dollar terms, it might not look like there's been growth, there's been significant growth, but when you look at it from the Naira terms, there's been significant growth, which means that there's a huge opportunity, you know, in the food business. So I just think that we need to look at the problem more closely and be able to solve it. We need to move from peasant farming to, you know, mechanized, and not just mechanized farming, technology-enhanced agriculture. I think it's one of the things we need to look, because we have to solve the food problem. I think we should start from power. I think that people moving to renewable is something that really should be encouraged and should be incentivized by government. I think that food is something that government needs to look at holistically across the country and ensure that we can drive down the cost of food, ensure that our agriculture, there's a lot of technology in our agriculture, there's a lot of mechanization in our agriculture, we can move away from peasant farming to, you know, more technology-driven farming, so that we can have more food in the country and drive down that cost. I think that government needs to look at the intersection between some of the challenges. When you look at the top 5 things that Nigerians are spending money on, we're looking at food, transportation, education, utility, and rent. I see an intersection of opportunity there. For example, the Lekki, the coastal road is going to create massive real estate opportunity along that axis. I think the time is right for government to look at a mass housing project in that axis, so that when that opportunity arrives, what would have happened is not only, you know, the capitalists, and there's no problem with the capitalists, but they're not the only one that have taken over all the, you know, property opportunities along that axis. Because what will happen is that people will move to that axis again, and then we're going to say that, oh, rent is expensive, houses are expensive there, but there needs to be that balance.
The Africa Venture Capital Week has just ended, and conversations there is set to drive investment into different sectors in Nigeria. Still on Business Morning, we had the board chair of the African Private Capital Association, organizers of that, and he told us some of the areas of interest as well as perception of investors concerning Nigeria.
It's not unique to Nigeria, right? Around the world, there are policy changes. I mean, the whole world has gone up in a bit of turmoil with policy changes in the US, right, on the tax issue. So it's not unique to Nigeria. But I think what's always important is to say, what are the trends, right? Are things getting better, right? I think that's what investors look at. And absolutely, you can say in Nigeria that things are certainly getting better. We're seeing on the monetary policy side, return to orthodox monetary policies, right? And that has led to just a lot of stability in our currency over the last couple of months, and that we expect to continue. I mean, the impact of that is huge. And again, I think for us, we don't really recognize it. We think of the pain in the past, and that pain still sits deep within us. But there are changes going on. On the fiscal side, there are lots of reforms going on as well, right, across different sectors. Maybe, I think all of us are impatient, and we would like things to move faster, but I think we have to look at the trends, and things are certainly getting better.
Unity Bank has launched the Genfi, an app targeted at reaching kids and teenagers between the ages of 8 and 18. By Unity Bank is a financial platform designed for kids and their parents and guardians to help them learn about and manage finances together. The management of the bank says that this new product is aimed at making the young within our society financially literate and responsible.
Children drawn from 8 schools within Lagos are here at the headquarters of Unity Bank to witness the bank's latest product, the Genfi.
We're learning from an expert.
The young ones are here with their parents, who are also invited to understand how the app works. Managing Director, CEO of Unity Bank PLC, Mr. Ebenezer Kolawole, in his address says the new product is in line with the bank's future plans.
Today, we in Unity Bank celebrate more than just this app. We celebrate the dreams of the youth, their ambitions, as well as the power of discipline and financial planning to shape their future. So I therefore bring you warm greetings and goodwill message from our board, from our management, as well as the entire staff of Unity Bank PLC.
Divisional Head Retail and SME Unity Bank PLC, Adenike Abimbola, states that the aim is to enable children become financially disciplined.
Imagine a teenager tracking their monthly allowances, budgeting for school supplies, and developing a sense of responsibility that shapes their future. That is the power of Genfi.
What's more important is that Genfi will involve children and their parents, as they also experience how the app works.
The Kids tab is where all your children are, so if you have multiple children, if you click on Kids, you can see this person has only one child.
It's a very brilliant product because not only does it have the educational part of it, it also helps children execute. So you're learning about, saving and investing, and you're also executing by saving and investing.
Parents and children appreciate Unity Bank PLC for creating Genfi.
Parents guide and kids grow.
Some of the kids you have at home, you have out there, you don't really know if they actually inculcate this savings habits from childhood. But when they come to this kind of environment and they see people around, even getting to know where some of their parents actually works, helps them a lot. It shapes their mindset.
It's so motivating for young kids like me, because there are also kids out there that don't have the privilege to see this kind of opportunities. So I want to say a big thank you to them.
I've learned how to save money, and that entrepreneurship isn't just about making money. It's about solving your own problems and others.
Genfi is designed to teach kids about saving, budgeting, and managing their money. The app facilitates communication between parents and children about their finances, fostering a collaborative learning environment and a demonstration of Unity Bank's commitment to the proper development of the Nigerian child.
Let's take a break on Business Incorporated. When we come back, we'll see the color of the market on the other side of Business Incorporated. Please stay with us. Welcome back. Still watching Business Incorporated here on Channels Television. Head to the markets now and see Nigeria's stock markets. The color is still red. Unfortunately, we're still around 105,000, down 0.10%. Now, we know we've had 2 consecutive negative closes just before yesterday's holiday, where the market didn't trade. Looking at the sectoral performance intraday, we see it's largely negative. Banking, for instance, is down, lost 71 basis point. Consumer down, oil and gas down, insurance even more, about 139 basis points. Industrial sector seems to be the only one to escape that profit taking at this time. Earnings releases are still on, but how much influence they have on decisions, the investors' decision at this time, still have a whole lot to be seen. We've seen, of course, from the big guys, GTCO and Zenith and all those ones. The dividends also have moved the market, but it does seem like perhaps the impact is waning off, and so we see investors taking other parts. So maybe looks like the market is going to close in the red today, unfortunately. But let's move away from the stock market and go to the fixed income market at this time and see what's happening there with Akpewe Oputu. She's the chief dealer at Lotus Bank. Hi, Akpewe. Good afternoon and welcome to the program.
Hi, good afternoon. Thank you for having us on the program.
Great. So is the profit taking in the stock market, is it translating to, bargain hunting, if we call that, in the fixed income space?
Okay, so for this week, the fixed income market has been relatively active. We had a bond auction earlier in the week on Monday, and the yields were trading relatively high at above 19% levels, which are actually very attractive for foreign investors. We also had an OMO auction conducted by the CBN this week. The closing rate was around 22%, above 22%, which is actually very good interest rates for the market. So investors are actually being seen playing on the fixed income space. The total purchase between the bond and the fixed income is over 1.2 trillion. So we can see the investors actually playing out in this market actively. The yields are very good. It's very good returns for investors. So the market has been really active on this front.
But I mean, apart from the I think on the treasury bills and all, we see like a 19% yield. And I remember the last conversation I had, the hope by investors that perhaps there'll be a little bit more when it comes to yields.
So yes, so we actually have the OMO auction and then we have the NTB auction. So the OMO auction usually is played out for the foreign investors. It's a way to attract them into the market, and we see the CBN giving higher yields at this OMO auction, above 22%, which is about 24% if you look at the all-in, the yield, the return for investors, and it's really attractive. Very few businesses you can invest in and go to bed that are secured, and you get up to 25% return on those funds. So it is actually very attractive for the foreign investors.
But who's dominating now? Is it domestic or foreign investors now, generally in the fixed income space?
So for banks, at 19% levels in the NTB auction space, it's quite good for local investors as well. So if you have idle funds and you're looking for a safe place to keep your money at the moment, you can actually do those levels. So 19%, 19.9 bonds, they're above 21% levels. So we also see that as very attractive yields in the market. And that's actually even causing stability also in the FX market, because whatever happened in the fixed income place, market tend to play out in the FX. So when you don't see people looking for safe havens on FX, they're actually investing in fixed income securities. There's been a lot of stability in the FX market. We've seen the CBN come into the market market during the course of the week. Despite what is happening in the US market, they try to intervene and create stability in the market, so we don't see rates devalue week on week. So we've been very stable in that front.
Yeah, so because we saw the Naira, I know when the tariff war really got on, we saw the Naira drop to 1,006. But we've seen it recover slightly though, but to under 1,006. So can we attribute it to activities in the fixed income space?
Okay, so like you mentioned, whatever happens in the US market somewhat affects our trading in our local market, because you see flight for safety when there are uncertainties on where the tariff between the US-China tariff is going to end. We see a lot of foreign investors come into the market to pull out those funds, and when you see a lot of buying, that means the rates goes as high as 1,605 or above the 1,600 levels. But because of the calmness now that we've seen in the US markets, the indecisions, the market has been relatively stable. The central bank has consistently come into the market to see that they maintain that stability. So day on day, you don't see a devaluation of the currency. And we've seen them come into the market last week. This week, they've sold over $82 million, which is quite a lot to calm the market. And this has actually brought respite to the market. We've seen stability, and the FX has been around 1.6, which is relatively stable for investors who are looking to buy funds.
Yeah, so while there's stability in the market, our reserves, be feeling the negative impact.
So if you look at it week on week, we were at $37.8 billion in our reserve. We still hovered around 37.4. So when you see those OMO auctions being conducted, it's because the CBN has probably gotten some funds for FPIs. So that's what translates into those OMO auctions that you see. And so it's part of those foreign investors we see come into the market, the funds that have been inflowed that are actually used to stabilize the FX market as well.
And we're seeing the calendar for the second quarter. We saw that the government intends to borrow more. I've been kind of curious, borrow less, I beg your pardon. I've been kind of curious, where else will they be going to apart from the domestic market? Obviously, the dollar is threatening now. It doesn't look like a good place to go to.
This administration is one that we should commend. They've actually looked inwards to see how they can raise internally generated revenue. And when the country is able to do that, it means less borrowing in this part of the country. So if the state governments, the federal government, everybody looks inward to see how they can raise inwards revenue for the country, then it means you would actually reduce the pressure on the federal government, and then you see less issuance. But as time goes on, we'll look at it quarter for quarter to see how the government has fared out in terms of their borrowings, to see the amount, the volume by which they came down, and how, if you compare it to the internally generated revenue of the country, you see whether they're actually making good waves on that.
All right, we'll certainly do that assessment maybe at the end of the second quarter. Thank you so much, Akpewe Oputu, Chief Dealer at Lotus Bank.
Thank you.
All right, leaving Nigeria now to other markets. We see for Johannesburg, they're sustaining the green color. So Nigeria is a lone loser at intraday, unfortunately. In fact, for Johannesburg, they've gone even beyond the 91,000 now, and they are on 92,000 after they gained 0.66% at intraday. For other markets on the continent, Egypt, it's also positive, 0.16%, but they are closed. Kenya, we know it's always the previous day, and they are also closed. So Egypt is closed positive, 0.26%, and also Nairobi is closed on Wednesday, 0.38% at the 12600 level. Then after Africa, we move to the Middle East, and there we see mixed color, but I think it's mostly green for them. Dubai is slightly up, 0.02% at 5,287. Abu Dhabi is also up intraday 0.19%, 9,574.13. Saudi Arabia is, however, negative, is down more than 0.5%, but it's closed. These two markets are closed for today. Remember, that public holiday that they have for Egypt and some of those Muslim countries. Qatar is also closed, lost more than 1% at the last trade on Thursday. And then we go to the United States, where futures rose early Friday. Investors are cheering that news about a possible negotiation between China and the United States, and that is giving a lot of calm to the markets. And so we see the Dow Jones is green, 0.43. S&P is also green. Nasdaq is also green. Investors staying optimistic also, even though they're looking out for those farm report, jobs farm report. More results coming out from the United States also, just like Nigeria. Apple slid 3% in pre-market trading after posting fiscal second quarter revenue from its services. And then also nearly 2/3 of the S&P 500 constituents have announced their results. 76% of them posting earnings that have surpassed estimates. So the good result also flowing into investor sentiment at this time. Then we head to Asia and see how that market is. The Nikkei is green, more than 1%. The cherry news and expectations from possible talks from the US and China. So China, of course, will be the leading park in there. Kospi is also green, 1.74. Hang Seng is green. Looking at other markets, Shanghai is, however, negative. And Nifty also, but Nifty is closed also for holiday, but closed positive. So Shanghai is the lone negative that we have from the Asian markets at this time. Now, we're still talking about the tariffs. We see that the EU is planning to present a response to the US tariffs as soon as next week. We know they hinted at, going the way of services, but perhaps we will get the details next week, according to many reports. That's what Chiponda Chimbelu will talk to us about in a couple of minutes. But before we get to where Chip is, let's go to industry leaders in South Africa and Nigeria. Policymakers and government officials, they gathered there for the South Africa-Nigeria Private Sector Engagement Session hosted by the Department of Trade, Industry and Competition in partnership with the MTN Group. The session underscored the need to strengthen economic cooperation between both countries, two of Africa's largest, most influential economies, for the success of the African continent.
During the 11th session of the Nigeria-South Africa Bi-National Commission (BNC) held in South Africa in December 2024. At that session, both parties agreed to convene the inaugural meeting of the Joint Ministerial Advisory Council on Trade, Industry and Investment during the 2025-2026 financial year. The Minister of Trade, Industry and Competition, Mr. Pakstow, who led the engagement, says that the session marks an important milestone in the broader vision of a more integrated and competitive African economy. CEO of Nigeria-South Africa Business Chamber, Diana Games, says this is a step in the right direction for industrialization in the continent.
Absolutely. I think that, I don't think it's just a case of the two biggest economies. I think all African countries need to be talking more to each other and finding out how can we replace, imports, for example, of food and things that are coming from other parts of the world. I mean, that's a good start. And I like the suggestion someone made of having priority areas. Let's identify a few and then drive those forward so we can just talk about a success of some sort in driving, especially in getting Nigerian companies into South Africa.
Absolutely a step in the right direction. I think if we play our cards well, we'll be able to establish that digital forum that will allow even startups and SMMEs to trade with each other in a safe space where money can be safe, where trade can be safe, and we have a place for economies to grow together.
But challenges like visa accessibility remain a hurdle for entrepreneurs hoping to fully tap into cross-border opportunities.
Nigeria and South Africa also needs to resolve this issue ASAP to enable business to trade. I mean, to get a visa to go to Nigeria, it's going to take you almost about 3 weeks to get the visa, and then they only give you a 3-month visa, single entry. And it costs you arms and legs. Same also with Nigerian business coming to South Africa. They're facing the same challenges. Yet today's technology enables everybody to know exactly who's trading or who's the person. So let's focus on the business people.
Delegate says this engagement marks a key step towards deepening regional cooperation. From Johannesburg, South Africa, Innocent Samos, Channels Television News.
We head to Tanzania, where the President, Samia Suluhu Hassan, has announced a 35.1% increase in the wage for public servants, citing the country's improved economic performance driven by workers' efforts. According to the President, the new wage adjustment will take effect from July this year, raising the minimum monthly salary from 370,000 shillings to 500,000 shillings. The President further said that the government, through the Minimum Wage Board, is reviewing pay structures in the private sector to improve conditions for workers. Still in Tanzania, Petroleum Development Corporation has launched its 25-year strategic plan in the Tanzanian capital, Dodoma, with oil and natural gas exploration among the top priorities. During the strategic plan's official launch, TPDC has been urged to accelerate the development of oil and natural gas exploration blocks, including Manzi Bay North, Eyasi, Wembere, Songo Songo West, and the liquefied natural gas processing and liquefaction project to ensure reliable energy availability for both domestic use and international markets. The Deputy Prime Minister and Energy Minister, Dr. Doto Biteko, issued a directive in Dodoma during the official launch of the 25-year strategic plan that's supposed to last between 2024-2025 to 2049-2050. The plan outlines the corporation's long-term vision and major objectives aimed at enabling Tanzania to fully benefit from its oil and gas resources to support sustainable national development. We move to Egypt now. The executive director for the Arab Group at the International Monetary Fund, Mohamed Maid, states that Egypt has repaid more than $10 billion to the fund from the principal amount of previous financing it's received, excluding interest. Might clarify that the total financing related to cooperation programs between Egypt and the IMF, amounting to 3 financing programs since November 3, 2016, up to the present, has reached $28 billion, including the current program. He points out that the current cooperation program between the two sides is valued at $8 billion and ends at the end of December 2026, noting that Egypt has received less than half of its value so far, with approximately $5 billion remaining to be embossed. The government of Zimbabwe has announced significant progress in the development of its mineral development policy and the rollout of a new online permit system as part of its ongoing efforts to modernize and formalize the mining sector. According to Information, Publicity and Broadcasting Services Minister Dr. Genfi Muswere, the mineral development policy is now 96% complete, while the online permit system has reached 90% completion. Dr. Muswere said that the progress aligns with economic growth and stability pillar of the National Development Strategy, which is aimed at enhancing productivity, transparency, and economic sustainability across all sectors of the economy. The government sees these developments as critical milestones in its push to digitize the mining sector, attract investment, and improve service delivery, particularly in mineral licensing and resource management. Kenya's National Treasury has proposed to triple the tax on employee welfare benefits from 9% to 30%. Currently, the rate is set by the Kenya Revenue Authority quarterly, depending on the market rates. However, the Exchequer seeks to align the fringe benefit tax with corporate tax rates. According to Kenya Revenue Authority, employees who get additional welfare benefits such as low-cost loans on top of their salaries are subject to this new tax. And Kenya and the United Kingdom have partnered to strengthen the East African country's cotton industry with the construction of a new processing facility in Lamu County. The initiative, supported by both governments, private sectors, aims to increase cotton production, create jobs, and reduce reliance on imports. Construction of the facility is due to begin almost immediately, with completion expected by November this year. It's projected to support 5,000 jobs within the next 3 years, while tripling cotton outputs in Lamu from 2,000 to 6,000 bales annually. The facility would source cotton not only from Lamu but also from Kilifi, Tana River, Kwale, and Taita Taveta counties, reducing transport costs and boosting local farmers' earnings. In Senegal, the government has unveiled a pilot project aimed at establishing an interministerial and interoperable data exchange platform. This initiative is designed to enhance administrative coordination through a secure digital system that will streamline the flow of information among various public institutions. The national deployment of this platform is slated for between 2025 and 2027. The project is part of the new technology that deals with digital public infrastructure program developed in collaboration with Japan International Cooperation Agency. It's built on a technical framework that emphasizes data security, a clear governance structure, and comprehensive training program to facilitate the adoption of the new system. Let's head to Berlin now, where Chiponda joins us with perhaps hints on how the EU is expected or will be responding to the trade tariffs with the US. Hi, Chip. Good afternoon and welcome to the program. I know we're expecting the details of it next week, but any heads up on what this plan might look like?
Good afternoon, Eni. Well, the latest information is from an interview with the EU trade chief, Maros Šefčovič, and he spoke with the Financial Times. And in that interview, he said that the EU could commit to spending an extra $56 billion a year on American products. And that would help offset the goods trade deficit, which is about the same amount. And then, of course, there's also a report by Bloomberg News, which says that Brussels could present trade proposals next week, and that would be reducing trade barriers, increasing investments in the United States, and buying American goods such as natural gas and technological products as well. Also, there's another report saying that Brussels apparently presented a two-track approach response to its member states this week, and that is according to Politico. And it says that EU officials made a list of concessions they are willing to make, and they have also come up with another list for the products that would be targeted with tariffs. Now, all of these three reports, of course, are giving us good reason, Eni, to believe that a proposal in response to those U.S. tariffs could be coming very soon from Brussels.
Yeah, well, just like we're expecting the talks between China and the U.S. to perhaps kick off, and this will bring mixed reactions. But how much of the impact of the tariff are you guys feeling over there so far?
Well, this week we did see a bit of what those tariffs do mean for the European Union, and that was, of course, mostly from Europe's auto industry in particular. Now, several firms, Volvo, Porsche, Volkswagen included, have said that their financial guidances for this year are uncertain because of those tariffs. And, of course, they are already harming trade between the EU and the US. Now, many European consumers, Eni, are very much willing to turn their backs on U.S. products, and if, of course, those tariffs are higher, and that is, of course, according to the European Central Bank's Consumer Expectation Survey, and it shows that U.S. tariffs on European products are actually causing many Europeans to reconsider buying American goods. Now, the most recent U.S. tariffs are potentially leading to a broader shift in the preferences of European consumers, and it is not just the tariffs that have led to a chasm between the EU and the US INI. There's also the rhetoric on values and democracy, and of course the disagreement over defense spending, and of course on how to proceed on ending that war in Ukraine, Russia's war in Ukraine. Now, Brussels and Washington are of course no longer on the same page of when it comes to all of those issues. So there's a lot going on here.
Yeah, a whole lot going on, Chip. And then you have your new government coming on. They have to be saddled with managing all of this, you know, on top of the other issues that I've risen before now. So it's going to be a busy time for you guys over there. But let's look at how European shares are trading at this time.
Well, Ini, European shares are continuing their rise today. Now, the pan-European Euro Stoxx 600 is actually up more than 1%, and that is mainly due to signs that there could be a potential de-escalation of trade tensions between the United States and China. That, of course, has lifted investor sentiment in a week of several earnings results and economic data. And of course, speaking of economic data, the latest inflation figures for the Eurozone do show that consumer prices here rose 2.2% in April, and that was, of course, more than was expected. Now, while European Central Bank policymakers normally rely on inflation data for interest rate decisions, right now they will be keeping their eyes on those U.S. tariffs. But speaking of the United States, investors are now shifting, of course, going to be responding to U.S. non-farm payrolls data. It just came in moments ago, and it shows that the U.S. added 177,000 jobs last month, and that was, of course, more than was expected. So we could expect a little bit of market cheer after those better than expected jobs figures from the United States.
Thank you so much for that hot news you just gave us there, Chip. So, I mean, I wonder if this means that President Trump is doing something right in spite of the rattle that the tariff is bringing in the world. We see more jobs, more than expected in the U.S., perhaps. You know, the Americans will applaud him, you know.
Maybe it's just it's just the weekend. It's Friday, and maybe everyone's happy, and they might maybe, I don't know. But the jobs data obviously has nothing to do with the day. Maybe that will take some time to feed into the U.S. economy. We have to wait and see. There's a lot of unknowns going on, Ini. It's so hard to keep up, but that's what we're doing here, and that's what we do every day, of course.
All right, Chip. Thank you so much. We'll certainly wait and see. With this, I know President Trump will blow his trumpet and tell you guys that, you know, he's doing well with creating jobs. So thank you so much, Chip, and have a great weekend.
Likewise.
All right, let's head to the crypto space and see what's happening there. I think one of the big stories coming from there is the venture capital firms. They invested $4.8 billion in crypto startups in the first quarter of 2025. And this is indicating a resurgence of crypto-related deals. Digital assets firm Galaxy reported this in its deal summary, noting that this represents a 40% increase compared to the fourth quarter of 2024. According to them, they say that it was not just the amount that VCs have poured into the crypto firms that increased, but the number of deals have also risen, with 446 deals in the quarter, representing a 7.5% quarter-on-quarter increase. So interesting there, the $2 billion investment of the United Arab Emirates, MGT, into the Binance accounted for nearly half of that total investment and was enough to make up the first quarter best quarter for the crypto and blockchain startup investment since 2023. So the United Arab Emirates, they are getting really serious with crypto. I don't know what they see, but they are really pushing the boundaries. And I don't know if they're going to overtake the United States when it comes to this, but that's They are the major drivers of that VC into the crypto space. There's also the Fastex launching Your Wallet. It's a new crypto wallet. The Fastex announced this, an upgraded version of its existing Fastex wallet app. The migration process has already started. It allows users to transition smoothly to Your Wallet to benefit from enhanced functionality and performance. Your Wallet introduces several enhancements, including real-time notifications for wallet activities, cryptocurrency, price alerts, and all of that. And then the other story is Kuwait. Kuwait is cracking down on Bitcoin mining and amid power crisis. So they were once considered a haven for cost-effective Bitcoin mining, but they've launched a sweeping crackdown on the practice. According to a report on May 1, authorities began targeting residential properties that are involved in cryptocurrency. So they're really taking it micro, citing that the activity is a major burden on the national power grid. The Ministry of Interior stated that mining operations pose a serious risk to public safety by unlawfully consuming electricity and potentially triggering power outage. You have Solomon Amunde now joining us for the program. Hi, Solomon. Oh, yeah, we see the numbers. Solomon, welcome to the program. I know you see the numbers right there also. So we see Bitcoin is in the green, 96. It went to 97, I believe, at some point, but dropped to 96. But there's hardly a movement around Ethereum, and I wonder what it is, Solomon. What do you find? What's going on? I thought, once you had Bitcoin moving, then you also had the alt following. What's happening around here?
Yeah, so Ethereum is actually having its bad time right now. Although no doubt the chart is looking on its quite bullish. It's sitting on a very, very interesting support level. When you look at Bitcoin Ethereum chart, it has a very, very solid support level, and we should be expecting a bounce. But aside that, investors' interest in Ethereum isn't at all-time high right now, especially with good competition and statistics from stats rather from Solana. Solana has been outperforming Ethereum on so many metrics. So right now, people are just hoping that Ethereum would bounce based on what we are seeing on the charts, which looks quite positive. But aside that, long term, people are still bullish on Ethereum. We still expect it to do at least 80% pump to like $3,500, and that's what's expected. But that will take some time, though. Take some time.
What are possible drivers? Because one would have thought that with the stability we're having now, which I believe is what's driving Bitcoin, then Ethereum would also follow suit.
Yeah. So what's majorly driving Bitcoin now is demand. Most companies are looking at setting their Bitcoin strategic reserve, and we also have lots of companies that are aggressively buying Bitcoin. Now, if you ask yourself, the next cryptocurrency that they would want to load up is Ethereum. So we have Ethereum as one of the top cryptocurrencies they want to load up, Repo too as one of them. Then we also have Solana. So it's quite inevitable for us to see the price of Ethereum go up. It will happen. It's just a matter of time. But definitely it would happen because it's still on the cards for investors, especially the long-term investors, because Ethereum remains a pioneer of blockchains that are capable of smart contracts. So that gives it a huge edge.
All right. So, and one of the stories, leading stories, that venture capital firms invested $4.8 billion in crypto in the first quarter. This is an increase of about 40% quarter on quarter. And it does seem that the United Arab Emirates is leading. What are your thoughts on this?
I think the UAE would want to also pump in more funds into cryptocurrencies, especially as we see AI growing aggressively, and also we see interest in AI. And we know that UAE, they love to give their people the best technology and want to simplify. And they also love to test and try new stuff, especially when it works. So crypto works. Crypto makes life easy. It makes transaction much, much easier. And they have been showing this interest for over 3 to 4 years now. So I expect them to double down on their spending and also try to innovate more around the technology. It's quite interesting too and lovely that USA has aligned with cryptocurrency. So generally speaking, the ecosystem would benefit so much from this within the next few years.
And as
So
you
it's a healthy
mentioned,
competition.
AI seems to be a driver too at this time.
Yeah, AI is like the most interesting topic right now. It's looking like the next big thing. If you look at even all the Web2 companies, they are all incorporating and creating their own version of AI, down to even Google, down to WhatsApp. We're seeing this. So it's only nice and also smart that every other company and every other ecosystem and industry tries to align with AI, and we'll see lots of investments too. So it's only natural to see the crypto industry push forward too for AI, because we strongly believe that most of the transactions, at least 50-60% of the transactions online in the next 3 to 4 years will be done by AI. So that's what we expect to do.
So Solomon, when you say 50-60% to be done by AI, will AI be doing the trading? Is it, providing the data? What trend do you expect to see?
Yeah, the number one area where AI will be able to generate about its bulk transaction from is from trading. So we'll see lots of automated trading happening, where AI will be looking through statistics and coming up with its algorithm to trade and also decide when to close certain trades. So we're also seeing AI agents, which are just simply like bots that can execute tasks on your behalf. And one of the easiest way in terms of crypto to implement this is when it comes to trading. So that's how they'll be able to generate the bulk of their transaction volume, is via trading.
Well, I hope Nigeria will not be left behind in this AI drive, because, when it comes to do with infrastructure and things like that, a lot of weaknesses seem to drag the country from adopting or being part of it.
Yeah, hopefully Nigeria doesn't get left behind. But if we want to be at the forefront, we have to start making the moves right now. The government has to be very intentional. Like you can see in other countries like UAE, you can see the government getting very involved. Even in the USA, government is getting very involved. So in Nigeria, we should see stuff like that. We should see funding initiatives to push this technology. That's what we want to see, basically, from the government.
You don't think the ISA is enough to bring in that confidence and bring in the funding?
I didn't get that.
The ISA, the Investments and Securities Law that was just passed and signed by the president.
Yeah, it is, but it is not enough. We want to see the government commit. We want to see the government come out and say, okay, we are setting aside 15 billion naira for blockchain initiative to push AI, to tutor people, to set up boot camps and stuff like that. That's like what we want to see the government do. Yeah, so if we see things like that and partnership with maybe some universities doing research in these areas, then that would show that the government is very much committed to making this happen. We have the brains in Nigeria to get these things done. We 100% have the brains. What they just need is the support from the government.
All right. We hope the government hear you and they could prioritize it. We have a lot of needs in this country that requires government funding. But, this will create jobs and all, especially when well managed. But just before I let you go, so where do you see us going now? We've seen green for a couple of days now on Bitcoin. Is this sustainable? Do we expect, another drag?
Yeah, so the upward momentum for Bitcoin right now is very, very strong. I see Bitcoin making a move for 100K. If we are able to go past 100K, we'll most likely aim for a new all-time high in this second quarter. But the trajectory right now is fully bullish. And the bad days are behind us. I don't see us making a move for $70,000 again.
Not even if China and US don't have this talk?
Well, if they do that, then we know that it's market and manipulation. but right now, everything is looking solid. Yeah.
All right, Solomon, thank you so much for your time.
Thank you so much, Ini.
All right, so that's it on the program. We're waiting for the details of that talk. Or the meeting points, it's just, there's a hint, the representative from US, from China. We hope this talk will hold and we'll see the details that they will come to agree to bring peace to the global economy at this time. But that's it on the program today. Thank you so much for being a part of Business Incorporated. It's Friday, so you can have a bit of rest. I know you had yesterday, but you have the weekend to rest, and then we're back on Monday, God's grace, and then we'll go around the circle again. It's always a joy doing that. But I'll see you for the stock market report tonight. I'm Ini John Mekwa. you.